Hi guys, this is OJ here, and it's Monday, the beginning of a new week. So again, we're going to look at Bitcoin and try to analyze where is the market going. Bitcoin is dropping below 46,000 as I'm speaking right now. I mean, it is hovering around 46, 45, 800. So not a very good start of the week. And of course, it is yet again driven by panic. The fear and greed index is yet again at extreme fear, and the whole market is actually down. There are a couple of coins that are doing slight pumps today, but pretty much everything is yet again in the red. It is a very bloody Monday, as you can see. So today I invited Dirk Hartig, analyst, who was already a guest on this podcast earlier, and with him we are going to analyze different charts and talk about Bitcoin in general, the bigger picture. What is happening? Is Bitcoin going up? Is Bitcoin going down? This is what everyone wants to know. This is what we're going to discuss. But first, a quick reminder about my current giveaway. So if you missed it, here it is again. This is my latest giveaway. It's currently ongoing until the end of December. You have to leave likes and comments on each of my videos, and of course you have to be a subscriber in order to qualify for that giveaway. We've had many giveaways throughout the year, we've had many winners, but yet again, even if you've won previously, you can still qualify for this giveaway. All you have to do is be a subscriber, leave likes and comments. It's really not that difficult. The top prize is Ledger Nano S. The next prize is $50 worth in Cardano ADA tokens and $50 worth in Solana tokens. These are the top three prizes. 3 winners. I will be announcing them at the end of December and the end of this year. This is my last giveaway for the year. Make sure that you participate. Make sure that you're a subscriber. You leave likes and comments. It's really that simple. All right, Dirk. Well, welcome to the show. Thanks for your time. And now let's talk Bitcoin. First of all, how are you doing these days? What are you up to?
Good. Well, thank you first of all for the invite again. Happy to be here to talk with you about our favorite topic, Bitcoin, obviously. And yeah, things are being wild. I mean, trading wise, the year is playing out very, very differently than I personally and probably a lot of people out there expected if we turn the time back a couple of months ago. But you know, this is what trading means. You have to adapt your trading to reality always.
Absolutely. I mean, what was your personal prediction for Bitcoin to be at the end of the year? I'm curious.
I was actually pretty committed that we are going to see the 100,000. First of all, because I'm a big fan of a stock to flow model. I still am. And I know there's a lot of discussion out there if it has been invalidated and so on and so forth. I still think it's the best quantitative model we have so far for determining where the fair price of Bitcoin should be. But yeah, what I underestimated really is, I think, what we are seeing currently in Asia going on in terms of selling pressure. That was not on my piece of paper, so to say, for my trading plan. But yeah, this is what I mean. You know, you have a working theory, and then as you go on, you adapt it to reality and adjust your position accordingly.
True. I mean, it is about possibilities, and of course, there's always more than just one possibility. So we have to analyze, you know, what's currently happening, and also external factors can come into play. A lot of the times when we have big market crashes, it's because of an external factor. Most recently, pandemic fear, again, lockdowns, all of those things, again, you know, bringing the stock market and pretty much all of the markets. Of course, Bitcoin, in this type of situations, Bitcoin also gets hit. And with Bitcoin, the rest of the crypto market as well, because we cannot have, you know, altcoins booming if Bitcoin is bleeding severely. I mean, if it's a small movements up and down, then we can have this kind of some of the altcoins really outperforming. But generally, when the fear kicks in about Bitcoin, it is fear for all crypto. And that's currently the case as well.
Yeah, absolutely. Yeah, it's like whatever Bitcoin does, 95% of those coins in the, let's say, top 30 are going to follow. Of course, you always have your outliers there to the top or bottom, but you know, remember, in terms of trading volume, in terms of cryptocurrency, in terms of market capitalization, Bitcoin is up here, and you know, the altcoin in spot number 30 is somewhere down here. It doesn't take a lot of money from an institutional perspective to manipulate those prices there. Yeah.
Or there could be something major happening, like a big upgrade, some launch of a new product or something like that, this particular project is doing. So that's why it's pumping. But typically it's the whole market goes down. And, these kind of big performances of altcoins, they can happen for a day, maybe 2 days. But after that, they also follow what the rest of the market is doing. So that's where we are at the moment. So what do you, have you adjusted your predictive price for Bitcoin by the end of this year? Because now we're really close. I mean, I think at this point, it's kind of easy to make a prediction about the price, but let's just do it for the sake of it.
Well, I'm afraid obviously we're not going to see the 100,000 just because we have the holidays coming up. A lot of the market participants probably are going to take off between Christmas and New Year's Eve. So don't expect so much action to the upside there. I wouldn't honestly be surprised to see something in the vicinity between 40 and 46,000 by year's end, with probably closer to 40,000 and to 46,000. But this will then change.
So you're
next
more
year
on the
again.
bearish side of things.
But very short term. Yeah.
Drop.
Very short term. Yeah. I think the reason for that is because we are seeing so much selling pressure from Asia. We have this deadline, 31st of December, where actually all of the worldwide cryptocurrency exchanges are not going to accept Chinese clients anymore. So a lot of the mainland Chinese clients are now panic selling because they are not sure. First of all, it's illegal for them to own Bitcoin according to the law in China. And second of all, if they still own Bitcoin or other cryptocurrencies, it's going to be hard for them to sell them and convert them back into fiat money. And so that's why we see at the moment during the Asian session always quite some pressure on the market, whereas in the EU and US session, we see more buying power again. And I think once, and this is going to probably peak shortly before New Year's Eve, because everybody wants to get out of the door, then obviously that hasn't done so far in the hopes of rising prices. So potentially there could be some selling pressure up to then. Then I think beginning of next year, the picture is going to change again, because then we are going to see the fundamentals kicking in more. And if we look at the on-chain data, if we look at especially also what the miners are doing at the moment, are they selling or holding on to their Bitcoin? They are hodling their Bitcoin at the moment.
One of our sponsors is PrimeXBT, an award-winning multi-currency trading platform which offers access to various markets, including cryptocurrencies, loads of forex pairs, also commodities and indices, which means you can diversify your risks by having exposure to non-correlated assets. They offer different leverage percentages on the different assets, and in order to provide the highest level of liquidity and instant order execution, PrimeXBT aggregates feed from 12 industry-leading exchanges and feed providers. More importantly, PrimeXBT is the exclusive home to co-vesting, a peer-to-peer copy trading module that features a 5-star rating system and global leaderboard that provides various metrics to take into account when choosing whom to follow. This is an automated trading feature that allows novice traders to leverage the skills of more experienced traders and collect profits in a hands-free, done-for-you type of a system. I have been using this throughout the year already. I like to be able to tap into markets that I personally don't know very well and I don't trade myself, like oil or gold, for instance. Another thing I really like about this exchange is the freedom to use it without having to share your ID or other sensitive data. KYC is not obligatory, and they have some of the lowest fees on the market as well. You can also use their co-vesting yield farming service and earn annual yield on your crypto assets, including stable coins. Percentages vary according to the amounts locked, so check them out. I also have a welcome bonus code that is in the description below, so give it a try by using the links in the description below. And right now you can take part in their money-winning contests. They just launched a whole contest marathon with weekly and monthly rewards. You can take part in this even if you've never used the exchange. All entrants work with dummy accounts, which means that there is no risk for you. You are allocated funds to use for these contests, and if you rank high and win win one of these prizes, you actually win real money. So there's nothing to lose, but a lot to win if you do. Give it a try. The link to find out more is in the description below. The graph, I'm actually going to pull the graph on the screen and
do that. That is like, you know, it's like one thing always looking at charts, but for the long-term pictures, you gotta have the fundamental view, and the fundamental view for Bitcoin, in my opinion, is if you look on the on-chain metrics. And
okay, this is not the one actually. This is the Google trend search for will Bitcoin go up again. I checked this as well just because I was curious, and it seems like we're quite low right now. So in terms of sentiment analysis, this is showing us that we are not really that fearful as we were back in July, so in the summer, and also at the beginning in April and summer. These were two drops here that we had where people were really worried. This time, not so worried, even though at the same time as I say this, the fear and greed index is really low. I mean, we are in extreme fear again, and we are at the same levels that we were in the summer, almost the same levels that we were in, at the end of May, when we actually crashed really hard. I mean, we went lower than right now, but we are very close to these levels. And as you can see, after a period of time being that low, we actually jump high up. And this jump is always going together hand in hand with the price jumps as well. So the fear and greed index is actually still showing us that it is a good time to be buying. But let me see, where is the chart that I was looking for?
Maybe on that really, really quickly also, I totally agree with you on that. You have to buy, I think back then, Andre Costolani, who was a stock market guru, always said you gotta buy when there's blood on the streets. And translate this is extreme fear for cryptocurrencies. It's a good buying opportunity. That doesn't mean that it's immediately going up again. But if you kind of like, if you, for example, have $10,000 that you want to invest, don't put it all in at once. Maybe spread it out over a couple of weeks, because you're not going to fish the bottom probably.
Exactly. And I mean, every time you see a bigger drop, you can actually buy a little bit. You don't even have to spend it in 2 or 3 trades. You can actually buy $200 or whatever. I mean, of course, this is not financial advice or investment advice, but I mean, you can do similar to dollar cost averaging. Like every time it drops, you buy a little bit, and you, at some point when it starts going up, you can then make up your mind whether you want to take profits and sell or whatever. It depends on whether you're going to be doing it short term or long term. But generally, at these kind of dips, when people are really scared, this is a good time. For the longer term, this is definitely always proven to be a good time to buy. For the short term, it's a different picture, because yes, we could actually go lower. We could go to 40K. Some people even anticipate 30K, even though right now at this point, I'm not really seeing the 30K, but it is a possibility. It's just, for me, it is a small possibility, but it is. I also saw a poll on Twitter where someone was asking what comes first, new all-time high or 29,000, which is pretty much 30K. And the majority is going for an all-time high. I mean, it's interesting, 25,000, almost 26,000 people voted here. And this is a tweet by Pentoshi. And I'm not actually following this guy, so I'm not really familiar, but someone retweeted it, and that's how I found it. I feel that this is quite indicative that the overall sentiment is still up.
Although I think you gotta be a little bit careful with those polls. When it comes to cryptocurrency on
Twitter poll.
On Twitter.
Some people were even taking it as a joke and stuff like that. So we can't take it seriously. But because we're talking 26,000 people, even though many of them might be trolls or just not taking it seriously, out of 25,000, I would say there's still quite a lot of people that would have voted, in all seriousness. So 60% new all-time high versus 41%, 29,000 first. It is quite close. It's almost 50-50, but we still see that there is a 10% extra going for the new all-time high first rather than the 29K. So I still see that the sentiment is fearful, but a little bit more on the positive side.
I agree. I think that's also backed up by the on-chain data, where you see like the people that want to hold on longer term to their Bitcoin. So longer term by definition is there more than I think 140 or 180 days, not so sure right now at the moment. And this cohort you always see being the ones buying, whereas you see the short-term holders selling at the moment. So short-term holders typically the ones at the moment that bought somewhere between 60 and 69,000. And I think that's very well reflected also in that poll. Yeah.
Yeah, I mean, they're trying to protect from bigger losses, and often people who are, coming in more recently, they're the first ones to get scared because they don't have they don't have the experience to actually, once you go through a few of these price corrections, you stop getting too scared. You kind of expect it. It's not, I mean, of course, it's not pleasant to see your investment dropping and stuff like that, but typically it's the ones that got in the latest, and these are the first ones to get panicked and selling. We see that the miners, this is the graph I'm showing here, the miners are not selling. They're actually holding, and we are very close to the all-time high of Bitcoin being held by miners, which was happening last December. So this December, not surprisingly, we are almost at the same levels as last December, and we have 500 Bitcoin difference than the all-time high, which was last December. And then as we entered into the new year in January last year, we saw that a lot of selling started happening. So is this going to happen again? We're going to find out. For the moment, miners are holding. And as you said, a lot of retail investors in China are selling because they fear, they're actually facing that outright ban, which is going to prevent them from being able to do it later on. So it makes perfect sense for them to sell. I'm pretty sure there's still a lot of miners that are in China, despite all the relocations and stuff like that. I wouldn't be surprised if there's still, I mean, I don't have the statistics, so I can't really go by numbers or anything, but I would imagine there's still quite a lot of them located in China. So I'll be surprised if they are not selling at all. Maybe they are in the process of relocating, or maybe there are, I mean, I'm sure people have found other ways. So I think I even read about it, kind of paying people in other regions around China, or other republics around there that would allow them to actually trade Bitcoin. So they kind of either pay for IDs or even directly for someone else to make an account and lend them that account and stuff like that. So this is also going on, but of course this can never be the majority. This would be far less people than overall what is the percentage of people owning Bitcoin in China.
I mean, this metric here, the unspent supply of miners being so high and so close to the all-time high, especially, also shows how profitable, despite the difficulty of mining at the moment, it is still for those miners to mine Bitcoin. They don't need to sell every Bitcoin they mine in order to cover their cost, which is mainly electricity, obviously. They can keep some because they still believe in rising prices there. And that is a very, very good indication, in my opinion.
Absolutely, but I think being around 40, even if we drop to 40,000, this is still a really good profit, because if I remember last time we were estimating costs, I mean, last time I was looking at costs and stuff like that, it was quite some time ago. I think it was around the last halving, and it was around $7,000-8,000 the cost to mine a single Bitcoin. Even with the price, with the difficulty going up, I would imagine it is still below $10,000 in terms of expenses. So Bitcoin being 40,000, you are well in profit at this point.
Yeah. And you probably need to sell like, every fourth Bitcoin you mine in order to cover your costs.
You can sell much less, not as often as people used to.
Yeah, I mean, so we have actually, I mean, you would suppose or you would think that the miners out there usually are the so-called smart money. I don't really like that term, but okay, this is what they are called. So the ones that have the most knowledge about when it comes to Bitcoin, when it comes to selling pressure, when it comes to the cycles and so on and so forth. And if this smart money currently is holding on to their stacks of Bitcoin that they generate, well, who am I to say that I shouldn't do that, for example?
Exactly. Another thing that I saw is that, of course, many people are aware that all the markets are down now because of the news about a new lockdown, possibly in many regions. Some already started. I think in Europe, we already have Holland going in full lockdown for a whole month. People were complaining a lot about that yesterday on Twitter and stuff like that. What is your take? Do you think that this will actually amplify the drops in the markets, or have we already, is this already priced in, all that fear and all of these headlines that are scaring people, the possibility of a new lockdown and everything? Do you think this is already priced in, or do you think we still have more room to be dropping because on the back of this type of news?
I think it is currently priced in the market. And I think we saw that beginning of last week, when we had the Fed, Jerome Powell, talking about starting to taper, so starting to stop this 220 billion asset buyback program the Fed is currently doing by March, and hiking the rates 3 times in 2022 by 0.25% to fight inflation. So normally, if a central bank would announce a rate hike, you would see stock markets maybe not crashing, but being under pressure. The immediate reaction we saw to that is relief. So we saw a little bit of a rally. Of course, later that week, the picture turned around a little bit again. But this shows that actually the thing the markets are afraid of most at the moment is inflation, in my opinion. And if we see from central banks their coordinated efforts to fight this inflation, we will continue to see rising markets. And as I said, I think the picture is really in January going to totally change. This doesn't take into account, of course, a black swan event. So if there suddenly a new variant in Corona pops up that is like Ebola, like everybody gets that and 50% of the people die. I have to knock on wood here. Of course, we all hope this is not going to happen. Things are going to be completely different. But at the moment, I think the fear kind of is priced in. So I don't really see what type of news related to Omicron could really lead to the market, crashing down by 10 or 20%. I'm talking about the stock market now, 10 or 20%, because Bitcoin at the moment is tied very, very closely to what is going on the stock market.
Yeah, it's correlated right now again.
Yeah. We saw that for the majority of half of last year. We saw in October Bitcoin decoupling a little bit from the stock market to the upside. In December now we have exactly the opposite picture. Bitcoin is underperforming the stock market.
Absolutely. Okay, so last question. What are you buying right now? Are you buying at all, or are you kind of waiting out to get a bit more confirmation on the market direction?
Well, I'm for my long-term portfolio, I'm always buying and hodling. And I really have this typical DCA strategy where whatever I don't need for expenses, or I have trading winnings and want to reinvest, parts of it always go into a long-term portfolio. And for that, I'm always quite happy when we see declining prices in Bitcoin, because it means I can buy more, which is nice because I plan on holding onto it forever. And midterm, I'm using those prices to slowly start to accumulate again now. So prices between 40 and 48,000, I'm starting to accumulate there again, because my working theory at the moment is that the fundamentals in general will be more important than the short-term technical picture, and we potentially could see Bitcoin and other cryptocurrencies, of course, along the lines, rising again, there maybe even to new all-time highs. So seems like we are seeing a prolonged cycle, really, something like a super cycle at the moment. Yeah. But maybe you asked me end of January again. Maybe I was wrong again. Who knows?
We'll find out. We'll find out. Yeah, I mean, definitely the cycle is getting prolonged. In fact, some people are now under the opinion that we are not going to see the cycles anymore. Even though I personally feel that we need, we will have another bear cycle, possibly shorter than the previous one. That's my gut feeling. I'm not basing it on any specific charting or anything, but it is also possible that with, because now we're in a different market, we have now a lot of institutional players. Institutional players do not bother with short-term swing trades. They don't go in and out of Bitcoin or Ethereum or whatever they've invested at every dip, at every pump. They don't do that. So we're now having a slightly different, not slightly, actually very different type of a market than it was in the previous bull run and everything. So this bull run is already quite different. And some people are now saying that most likely we're not going to have a bull run followed by a bear run and another bull run as in cycles, but it will more be as in, going upwards as a bull run, correcting for a shorter period of time, not for a year or 2 years, but, for a month, 2-3 months, perhaps similar to what we did in the summer, then making another rally upwards, then correcting again and just continuing like that. Now, that's not my experience with trading. Of course, I got into Bitcoin and trading around 2016. So my experience is cyclical, but I would be actually quite happy to see something like that play out rather than a full-on bear cycle lasting for over a year, which was really detrimental to many people. Many people capitulated, many people lost. I mean, they didn't have the patience to hold and to bear the storm. So they saw that losses, and we're talking losses of 60, 70, 80%. So almost, everything lost. And of course, some of them couldn't actually come back to it because they had already, lost a lot of savings and stuff like that. So what's your take? Do you think we are still continuing cyclical?
No, I actually agree very much with you, but I think we are in the minority with this opinion. I think we are seeing Bitcoin and really Bitcoin and Ethereum only maturing into a real asset class. So into what you would expect in terms of daily up and down of volatility patterns, also from other asset classes like stocks, like bonds, also like currencies, which will mean in the future that we are not going to have this extreme volatility anymore. I mean, imagine something like days where you have like 10, 20% up or down. This is unthinkable in other asset classes. You don't see that in stocks. And if you see that, it's called a Black Monday or whatever. And especially you don't see that in currencies. And remember, the initial design of Bitcoin is supposed to be a currency. And I cannot remember any day where we had like euro or dollar swings against other currencies of 5 or 10%. This is just not happening.
Typically, this is a huge
this would be
traditional assets. Yeah,
really. And of course, as the volatility gets tighter, it will attract more institutional investors, especially investors like pension funds, which you have to be quite conservative in their investments. They cannot invest in something that at any time can go down suddenly by 80%. Imagine that if you are taking care of a pension of workers of a company or something, you cannot do that. And also more liquidity coming in. I mean, we've seen a lot of liquidity coming in, but the real institutional liquidity, the banks, if they really on a broad scale start offering cryptocurrencies as products in whatever vehicles to their clients, this will reduce the volatility. The more liquidity is in the market, the lower the volatility spikes are going to be. which at one side, if you are like day trading Bitcoin, for example, it's a sad thing. You want this kind of volatility, maybe not 10 or 20% suddenly, but if you have like 5% of volatility, that's nice. Those are the best day trading days for me always.
I still feel that we are going to continue being volatile throughout next year, definitely. And possibly for at least another 2 or 3 years, we're still going to see this kind of 30 to 40% corrections, not necessarily in a single day, but in a short space of time. These kind of corrections are still good for us. They do establish support zones and everything. So it's not bad, but for the short-term trader, it could be bad. It could be that you bought Bitcoin just a few days ago and now it's crashing by 30%, and it's, then you have to wait. And sometimes you have to wait for months in order to
months or even years. I mean, all those people that bought in 2017 up at $19,500
Yeah,
they had to wait for 4 years to see those prices again.
I wonder if they were waiting, or did they just capitulate earlier at lower prices and gave up? I don't really know.
I don't know either, but I assume normally you would throw it out and sell it at one point, because you are just so fed up. You don't want to see it anymore. You know, every day you look at the prices, you get sad. But
I think those who were buying at 20K or 19,800, whatever it was, these were people that really got caught up in the FOMO and the hype. Yeah. And these were people that had no understanding of investment. How these assets are moving on the markets, how the price is going in cycles and all of that. They had no idea, because if you had even the slight idea how, markets are being moved and everything, you would not be buying during a parabolic type of a pump, because Absolutely. you would know that this is going to be followed by a correction. Even if you don't anticipate a bear market for 2 years, you would anticipate a correction of 20-30%, maybe even more. So it wouldn't make sense for anyone to be buying unless they were really inexperienced. So I think that these were the people that were buying at the top.
I think so too, but nonetheless, even if that happens to you, if you buy and when you see the market correcting by 20 or 30%, I think a good strategy always is just, take your mouse wheel on your chart and zoom out, go all the way back to maybe 2013. And this will really put things into perspective for you. And then you'll see like how minuscule this dip is in the whole long-term picture.
Correct. Perfect. All right. Well, thank you very much for your time, Dirk. You're always welcome to the channel. I'm gonna ask you to come again probably in a couple of weeks as we start the new year. We can actually do another one of these calls and see what's happened.
All right. Good. Great talking to you again.
Absolutely. Great talking to you. I'm gonna see you soon.
See you soon.
And
take care.
Happy holidays. If I don't speak
happy holidays. Merry Christmas. Happy New Year. Absolutely.
All right, well, this wraps up today's episode of Crypto Corner, everyone. Thanks for staying until the end. I hope this brings you value, and if it did, please share it with someone else who will benefit from watching this. Also, show your support by leaving a like and a comment below. This will help the algorithms pick up this video so it can reach more people. Also, make sure that you check out the links in the description below, where I list all of my top crypto services, exchanges, wallets, my top charting tools for market analysis, and my 2 ebooks, Learn Crypto, the ultimate beginner's guide to investing in cryptocurrencies, where I share with you everything I've learned in my 6 years in this industry, including the many mistakes that I've made, so you can avoid repeating those. And Crypto Jargon A to Z. This is a complete crypto dictionary with over 1,000 terms, acronyms, and trading slang that you should know. It's an Amazon bestseller, and it's now in its 3rd edition and at a very low price as well. If you want to be on my mailing list and receive my bi-weekly crypto newsletter, where I share with you market insights, the link is also in the description below. Trade carefully and stay profitable.